closing trades are looking very, very smart because we are sitting at the highest point of the trading session, 19,800 thereabouts, and above that comfortably. So at the moment, 19,840 actually for the Nifty. It's not just that, even the broader markets are actually participating quite healthily. In fact, mid-cap and the small-cap index both are actually sitting at record high levels. So small-cap index has been scaling fresh highs, and mid-cap index has actually managed to scale fresh record high today. IT index, that's powering ahead, one of the top sectoral gainers today. It's the biggest single session gain that we have seen in the IT sector in the last 4 months. And pick up any of the names, right from a TCS to a Coforge to an Emphasis, all of these stocks are firing away in the trading session. Nifty Pharma is your second top performer sector. It's actually sitting at 1 month high, and quite a few stocks from that vertical too, sitting high by anywhere between 3 to 5%. The only sulkers or, the drags on the markets right now are FMCG as well as PSU banking space. So that's in the slow lay, but other than that, it's a very, very vibrant market that we have at our hands, Aisha.
Absolutely, and for technology to actually hold up for a second consecutive day is quite meaningful, and across market cap categories. Anisha just flagged off the large caps, but JP Morgan, for instance, has come out with a note this morning talking about how significant interest they have within the niche segment, that of auto ER&D. So their top picks are Tata Elxsi, KPIT, L&T Tech. Of course, it has to be noted that KPIT has already had its time in the sun, though of course the street is clearly divided on whether or not there is a meaningful upside from the current levels in a Tata Elxsi or not. That we'll of course chat about with our experts in just a short while from now. But Europe, has started off a little bit all over the place, quiet but with a marginal positive bias, at least for markets like DAX, FTSE, or for that matter FTSE MIB. We clearly seem to be the region outperformers so far because Asia, remember, has had a bleak trading session today. While some of the markets did recover from their session lows, Hong Kong, Shanghai, Japan, they still closed very much in the red. Of course, there was anticipation ahead of the US-China talks, and it's a 2-day meet. Day 1 is already done, but day 2 is still yet to take place. But at the high point of the day, couldn't have asked for anything better. Kunal, what are you reading on the charts from here?
Yeah, I think a perfect script for the markets. The Nifty's managed to come back about 19,800 today. The Bank Nifty, I think, is looking quite charged up. And what I like about the markets as such is the holistic participation across so many sectors. So autos making a comeback, two-wheelers, four-wheelers making a comeback. Then you've seen metal stocks also managing to recover. Tata Steel, I think, is on the verge of a breakout of the 50-day moving average. IT stocks are seeing a very strong round of short covering over the last 2 days, specifically today. So I think when you have such kind of a streak where the huge underperforming sectors, when these stocks and when the sector makes a comeback, it's just a matter of time that the index will also gain momentum. So 20,000, I think, is just another 150 odd points for the index, which I believe could be achieved hopefully in the next few trading sessions.
Right. The script looks perfect. Now all we need is, I think, a World Cup win and Monday 20K.
Oh,
yeah?
I think that'll be double.
That'll be amazing, wouldn't it? Okay. Nooresh, where do you think the leadership is going to come in from? It's IT, auto, which are now participating quite a fair bit and leading the charge. But could it be the same from banks, for instance?
So the leadership has been clear in terms of auto stocks, which have been leaders. It's just that their weightage is low in the index. Even in the banking space, you can clearly see the leaders are Axis Bank, IndusInd Bank, but the weightage continues to be low. So in terms of the high weights, what could lead from here is a Kotak Bank and HDFC Bank making a bounce back because they've corrected quite a bit and have been sideways for quite a long time. And Reliance Industries. So Reliance has gone nowhere for a long period of time as well. So a recovery in the heavyweights and the leadership which is going on should continue. We've hit, interestingly, Nifty 50 equal weight has hit a new all-time high. So that clearly shows you that broader base momentum is pretty strong in the Nifty names as well. So we are seeing leadership continue. Something like Maruti has done well, and now even we are seeing a Hero MotoCorp make a new 52-week high. So clearly we need a little bit of a help from the heavyweights, and we could be crossing 20,000 pretty quickly.
Well, yes, and I was just going through the stocks sitting at record high level, and it's a very, very long list, right? From a Craftsman to MapMyIndia to a KPIT Tech to an MCX to NTPC, Oberoi Realty, Tata Motors. Titan, the list is really, really long, and I'm not even halfway through that. Mayuresh, what do you make of this? I mean, just a couple of weeks ago, there was this entire worry about mid-caps being frothy, the valuations being a bit of a trouble for the small caps, and they have bounced back the strongest after those corrections.
Afternoon, Anisha. Oh, absolutely. I think the mid-cap and small-cap index probably look very, very resilient across time buckets. And even in the fall that we probably saw, there were some jitters for the broader market fall. But the bounce back has been equally sharp, which shows the resilience of global and local investors, specifically local investors, when you're talking about ultra HNIs, retail investors as well, because that is where the focus area of the market has been. FIs are largely focused either on the index stocks or largely liquid stocks within the mid cap pack. So the bounce back in terms of how the India story probably stands, and with a lot of tailwinds that the global markets are now giving us, both in terms of data points as well as expectations of not hard landing in the US markets, as an example, European markets inflation cooling off, both core as well as the nominal inflation that we are probably seeing is giving signs that over the next few quarters, as the markets are expecting rate cuts as they start coming through, discretionary spending patterns will hold out and India probably stands out. So I think it has been a resilience performance. But yes, within pockets of this space, one really needs to be a little bit more careful because some pockets have probably overstretched themselves in terms of how the valuation matrices probably look.
Right. Mayuresh, hi, afternoon. Where do you think the next leg of contribution is going to come in from? And, you know, the move that you're seeing in the large cap IT space, do you think that's justified? I mean, is there merit in buying large cap IT right now?
Afternoon, Aisha. I think the entire argument between mid and large cap IT was largely laid down by the thesis in terms of consistent order wins coming through for the mid cap players. They were seeing no price and demand destruction happening at their end. And even in periodicities where the large cap IT companies were reporting reasonably soft set of order inflows, though the order inflows have been reasonably strong, even for the large cap IT companies till date. The extent in terms of management commentary for constant currency dollar revenue remaining strong, no issues seen from the client side, probably gave the kind of moves. And we are still seeing those moves in a whole host of mid cap companies. Now, the valuations for mid-cap IT versus large-cap IT have obviously expanded significantly as we speak. And therefore, with the expectations of a soft landing in the US, discretionary spending patterns should normalize by the first half of the next financial year. And as that happens, what you're expected to see probably and possibly is that revenue guidance in the next financial year probably comes back to the normal track with normal EBIT margins, which means a lot of IT spending, which surrounds AI, cloud computing, data centers, the 5G ecosystem, should bounce back very, very smartly as the rate cut cycle gets initiated in the second quarter of the next financial year. So to that extent, I think the large cap ITs, maybe 1 or 2 quarters of more softness can probably be expected. Generally, a weak quarter expected in the third quarter with a lot of furloughs expected and client discretionary patterns expected in the fourth quarter as well. But I think they should bounce back very, very smartly and fill in the valuation gap that the mid-cap IT companies versus large caps probably have. So yeah, if you probably ask me at this juncture, maybe after this quarter's numbers, large cap IT becomes a very, very interesting proposition to probably.
Sure, point taken. What about the auto and auto ang space, Mayuresh? Craftsman automation is at record high level, 7% higher. You also have Bosch, which is actually making quite a bit of move, and that's a large move given the stock is almost 20,000 rupees and above. So 4% move as far as Bosch is concerned. And other auto players, Hero MotoCorp, as they came out with the announcement that the retail sales during this festive season has been at record high as well. How would you play this theme?
It's one theme that structurally looks good, Anisha, even at this point of time. So whether you talk about two-wheelers, the passenger vehicles, or even the MHCV segment, as far as the OEMs are concerned, the numbers have held up pretty well. And as the transitioning probably happens specifically for two-wheelers and PVs, from internal combustion engines to the electrical mobility platforms, and new launches expected over the next few quarters, the kind of footfalls that we are seeing the kind of order books that we are seeing for PV players, two-wheeler players as well, the new launches which are very well accepted, specifically for two-wheelers, even in higher CC segments. I think that lays heed to the point that the kind of structural story in terms of demand probably still remains intact. When it comes to the supply factors, a lot of input cost inflation related issues, the semiconductor related issues largely behind. Yes, we are hearing with steel prices a little bit on the higher side. Some negotiations are happening between the OEM players. But even if that happens, the marginal pass-through will probably come through. Auto anchors, again, as a corollary to the entire auto industry, both for the OEMs where the demand stays strong, as discussed, and the replacement market, where the demand probably is expected to remain robust as well. I think both these legs are working for a lot of these players. And that has been exhibited through numbers. So you look at numbers for battery makers as an example. Exide, Amara Raja gave decent set of numbers. Again, the transition that they are doing towards the lithium ion, the capex that they have made, both these players, the transition will be gradual and a very transient one, which means that the capex that they'll probably do will be in the right direction without having too much of stress on their balance sheet or front loading of a lot of debt on the balance sheet and internal accruals doing the trick for them. Similarly, look at companies like Gabriel as an example. I think it had a huge move yesterday. Sequentially, year on year, a good set of numbers that they probably reported. Minda Industries has always been a top-notch player when it comes to the auto anchor and the entire transition from the internal combustion to the electrical mobility platform. So yeah, structurally, I think the space looks very, very good. Is valuations a little bit on the higher side? Definitely, yes. Is a cool-off expected for fresh entries, specifically in two-wheelers, PVs, specifically two-wheelers, if you ask me? Yes, but anybody holding on to this space can definitely work on. And auto ancillaries, as a corollary, looks far more interesting with the kind of names that are from.
Right. Okay. Well, all eyes now are on the first Tata Group firm, which is going to go public in nearly 2 decades. We're talking about the Tata Tech IPO, a wholly owned subsidiary of Tata Motors. And the IPO is all set to open on November 22nd. In fact, hear it out from Warren Kevin Harris, the CEO and MD at Tata Technologies.
What I can tell you is that we are incredibly ambitious in terms of the value that we want to deliver to the customers that we work with. We're incredibly ambitious in terms of growing the breadth and depth of the capabilities that we represent. We truly believe that India will be the innovation and the engineering hub for the global manufacturing sector. We are, as confirmed by Zinnov, as the #1 automotive engineering service provider here in India, and we're going to work very, very hard to protect that position. We are investing very heavily to improve our positioning in aerospace, transport, construction, and heavy machinery. And as I referenced before, I truly believe that India will be the innovation hub, the platform from which the majority of product development work will be driven in the future. We believe that we are in a fantastic position to be able to fulfill that potential for Tata Technologies, for the Tata Group, and to make a meaningful contribution to what will happen to the industry over here.
That's the take coming in on Tata Technologies and what they intend to do with the business going forward once they IPO on November 22nd. But Mayuresh, great to have you on the show. We'll let you go on that note. Seems like you're in a bit of a rush today. In fact, we're holding out quite okay, about 150 odd points up in the green. It continues to be technology, but within the broader universe, there's also a Bosch, Manappuram, which are also scaling quite smartly up in trade. In fact, holding out 4.5% to 6% apiece.